Christmas Eve, 2025. While families were wrapping presents and preparing for the holidays, something broke in the financial system. Not with a bang, not with headlines, but with silence. The kind of silence that comes when a machine designed to run forever suddenly has nothing left to give. If you checked silver prices this morning and saw $72 per ounce, if you felt that rush of excitement mixed with confusion, stop right there. Because what you're looking at is not a rally. It is a funeral. The funeral of a system that has controlled the price of silver for over 50 years. The COMEX vaults, the beating heart of the global silver market, are empty. Not low, not stressed, empty. And the people who run this casino just realized they cannot pay out the winners. In this emergency investigation, I'm going to show you exactly what a vault drain crisis looks like when it hits terminal velocity. I'm going to prove to you using official CME Group data that over 60% of deliverable silver vanished in 4 trading days. And I'm going to reveal why the federal government declaring December 24th and 26th as bank holidays was not about Christmas. It was about buying time. They froze the vaults. They stopped the deliveries. And now the entire paper silver market is holding its breath until December 29th. This is the story of the Christmas Eve lockdown. To understand why COMEX is in emergency mode right now, you need to understand what happened in the first week of December, because that is when the system broke. For decades, the COMEX has operated on a simple principle. Most people who buy silver futures never actually want the metal. They want to speculate, they want to trade, they want to make money on price movements. So the exchange only needs to keep a small amount of real silver in the vaults. Maybe 10% of the total contracts, maybe 15%. The rest is just paper promises. But in December 2025, something changed. The paper stopped working. On December 1st, the registered silver inventory at COMEX stood at 150 million ounces. Registered means available for delivery. It means if someone demands the metal, the vault has to hand it over. In the first 4 trading days of December, traders demanded delivery of 47.6 million ounces. That is nearly 60% of the registered inventory in 4 days. To put that in perspective, in a normal month, COMEX sees maybe 5 to 10 million ounces of delivery requests. In December 2025, they saw that amount in a single session. By December 4th, the vaults were in freefall. Every single day, millions of ounces walked out the door. JP Morgan Chase Vault lost almost 600,000 ounces in a single day. Asahi Depository bled 1.4 million ounces. The exodus was relentless. Here is the part that should terrify every person holding a paper silver contract. The total inventory today, December 24th, is 450 million ounces. That sounds like a lot, right? Wrong. Because only 127 million of that is registered. The rest is eligible. Eligible silver is metal sitting in the vault, but it is not available for delivery. It belongs to private owners. It is locked away. It is off limits. So when you hear that COMEX has 450 million ounces, understand this: only 127 million can actually be used to settle contracts. And here is the nightmare scenario. As of today, there are pending delivery requests for December 30th totaling 12,688 contracts. Each contract is 5,000 ounces. That is 63.44 million ounces. If those deliveries go through, COMEX will have 64 million ounces left. That is it. 64 million ounces to backstop the entire global silver futures market. A market that trades billions of ounces in paper contracts every single month. This is not a stress test. This is a death spiral. And the people running the exchange know it. Before we go further, let me be clear. This is an educational analysis of current market events. Nothing I say here is financial advice. I'm not telling you to buy or sell anything. Do your own research and consult with licensed professionals before making any investment decisions. Now back to the crisis. So what did they do? They declared a holiday. On December 20th, President Trump issued an executive order designating December 24th and December 26th as federal holidays. Banks closed. The Federal Reserve closed. And most importantly, the COMEX delivery system froze. No settlements, no wire transfers, no metal moving out of vaults. The official reason? Christmas? The real reason? The vaults cannot handle another 4 days of withdrawals. They need time. Time to figure out how to manage 63 million ounces of pending deliveries without defaulting. Time to convince some of those delivery requests to roll over into January contracts. Time to pray that someone, somewhere, brings more silver into the registered category. This is the lockdown. Not a formal announcement, not a press release, just a bureaucratic maneuver disguised as holiday generosity. But the market knows, the traders know, the physical buyers know, and now you know. Let me take you back to 1980. Because if you do not know this story, you will not understand why today is so dangerous. In late 1979, two Texas billionaires named Nelson Bunker Hunt and William Herbert Hunt decided to corner the silver market. They believed the dollar was dying. They believed precious metals were the only real money. So they started buying, and buying, and buying. By January 1980, the Hunt brothers controlled over 200 million ounces of silver. They used massive leverage. They borrowed billions of dollars to buy futures contracts. They demanded physical delivery, and the price exploded. Silver went from $6 an ounce to $50.35 in less than a year, a 700% gain. The COMEX was in panic mode, because if the Hunts kept demanding delivery, the vaults would run dry. So on January 7, 1980, COMEX changed the rules. They implemented what they called Silver Rule 7. It restricted large holders from opening new positions. It forced liquidation-only trading. In other words, if you had a big position, you could only sell. You could not buy more. This triggered a margin call cascade. The Hunts could not meet their obligations. And on March 27, 1980, a day now known as Silver Thursday, the price collapsed from $21 to $10.80, a 48% drop in a single session. The Hunts went bankrupt. They faced $134 million in fines, and silver did not return to $50 for 31 years. Now fast forward to December 2025. The structure looks eerily similar. Prices have exploded. Silver started the year around $30. Today, it is $72, a 142% gain. The vaults are being drained at unprecedented speed, and the exchange is scrambling to manage the crisis. But here is the critical difference. In 1980, it was two guys with borrowed money trying to manipulate the market. In 2025, it is the entire world trying to get their hands on physical metal. This is not speculation. This is not leverage. This is industrial users, sovereign nations, and institutional investors all realizing at the same time that there is not enough silver to go around. The Hunt brothers were trying to create artificial scarcity. The 2025 crisis is driven by real scarcity, and you cannot regulate away reality. If you are finding this investigation valuable, hit that subscribe button right now, because what I am about to show you next about the supply deficit will completely change how you view this market. Why is there not enough silver? Because we have been living on borrowed time for 7 years. The Silver Institute publishes an annual report tracking global supply and demand. According to their data, the world has been in a structural deficit since 2018. That means every single year, we consume more silver than we mine. The cumulative deficit over 7 years is 1.2 billion ounces. Let me say that again. 1.2 billion ounces more silver has been consumed than produced since 2018. That is more than an entire year of global mining output. Where did that silver come from? Stockpiles, government reserves, private hoards, scrap recycling. But those sources are not infinite, and in 2025 they ran out. Mining output is essentially flat, about 800 to 850 million ounces per year. Most silver comes as a byproduct of copper, lead, and zinc mining. You cannot just open a new silver mine overnight. It takes years. Meanwhile, demand has exploded. Solar panels are the biggest driver. Each solar panel uses about 20 grams of silver. It is irreplaceable for now because silver has the highest electrical conductivity of any metal. The global solar industry consumed approximately 150 million ounces of silver in 2025. That is nearly 20% of total global mining output, just for solar. Then you have electric vehicles. You have artificial intelligence data centers that need high-performance chips. You have 5G infrastructure. You have medical devices. Every single one of these industries is growing, and every single one needs silver. But the demand that broke the camel's back was geopolitical. In 2025, something shifted. The United States officially designated silver as a critical mineral. This happened in November 2025 through the U.S. Geological Survey. Critical mineral designation means the government views silver as essential for national security and economic stability. It means strategic stockpiling. It means potential tariffs on imports. It means the private sector is now competing with the government for supply. And it is not just the US-China stopped exporting silver completely. They implemented a no-export policy because they need every ounce for their domestic solar and electronics industries. Russia is hoarding. India is hoarding. Turkey imported record amounts. The BRICS nations are shifting reserves from US treasury bonds into physical commodities. This is not investment demand. This is not jewelry demand. This is nations preparing for a world where paper currencies mean nothing and physical resources mean everything. Then, in December, geopolitics escalated. The United States declared a total blockade of Venezuela. They called it the largest armada ever assembled in the history of South America. The official reason was drug trafficking and terrorism. The real reason was oil and influence. On December 16th, Venezuela was designated a foreign terrorist organization. U.S. forces seized oil tankers. They conducted 28 military strikes in the Caribbean and Eastern Pacific between September and December. At least 105 people were killed. Russia and Iran pledged full cooperation with Venezuela. China condemned the blockade. The UN Security Council held emergency meetings. This is not a regional dispute. This is a proxy conflict between superpowers playing out in the Caribbean. And when superpowers start flexing military muscle, investors flee to hard assets. Gold hit $4,500. Platinum surged 140%. Copper jumped 37%. But silver is the star, because silver is both a precious metal and an industrial metal. It is money and it is technology. And right now, both of those narratives are on fire. Drop a comment below and let me know if you think this geopolitical crisis is the real trigger, or if it is just another excuse for the vaults to hide their real problem. I am reading every single one. So here we are, December 24th, 2025. The COMEX vaults are nearly empty. Pending deliveries could cut the remaining inventory in half by December 30th. The federal government just froze the banking system for 4 days under the guise of a holiday, and silver is trading at an all-time high of $72 per ounce. What happens next? There are 3 possible scenarios. Scenario 1, the deliveries go through. 63 million ounces walk out of the vaults on December 30th. COMEX is left with 64 million ounces of registered inventory. The market sees this and panics. More delivery requests flood in for January. The vaults cannot keep up. COMEX is forced to declare force majeure. Force majeure means act of God. It is a legal clause that allows the exchange to suspend physical delivery and settle contracts in cash. If that happens, the paper price of silver will decouple from the physical price. You will see COMEX silver trading at $70, while physical coins and bars trade at $100 or more. The exchange loses all credibility. The center of silver price discovery shifts to Shanghai or London, and anyone holding a paper contract realizes they were never going to get the metal anyway. Scenario 2. COMEX convinces the longs to roll their positions. Instead of taking delivery in December, they offer incentives to move those contracts into January, February, or March. Maybe they waive fees. Maybe they offer a premium. Maybe they quietly call the big players and negotiate. This buys time. It lets the exchange survive through the end of the year. But it does not solve the fundamental problem. The deficit is still there. The demand is still there. And in January, the same crisis repeats. This is just kicking the can down the road. And every month they kick the can, the pressure builds. Eventually, someone says no. Someone demands delivery. And the whole thing collapses. Scenario 3. A black swan? Something happens that nobody is pricing in right now. Maybe a major mine suddenly comes online and floods the market with supply. Unlikely, but possible. Maybe the Federal Reserve announces a new policy that tanks commodity prices across the board. Maybe the geopolitical situation in Venezuela resolves peacefully and safe haven demand evaporates. Maybe AI demand collapses because of a tech recession. Any of these could change the trajectory. But based on what we know today, based on the structural deficit and the industrial demand and the geopolitical chaos, Scenario 3 seems like wishful thinking. Here is what I believe. The Christmas Eve lockdown is not a temporary hiccup. It is the beginning of the end for the paper-silver market. For 50 years, COMEX has set the price of silver using futures contracts that are almost never delivered. They created an illusion of infinite supply by trading paper. But in 2025, the physical market called their bluff. Industrial users need the metal. Nations need the metal. And there is not enough to go around. The vaults are empty because people stop trusting the paper. They want the real thing. And when you demand the real thing from a system built on paper promises, the system breaks. This is not about market manipulation by a few billionaires like 1980. This is about the entire world waking up to the reality that we do not have enough silver for the future we are trying to build. Solar energy, electric vehicles, artificial intelligence, 5G networks, medical technology, all of it requires silver, and all of it is growing faster than we can mine the metal. If this analysis is opening your eyes to what is really happening, smash that like button and subscribe, because I will be tracking every single development as this crisis unfolds through the end of December and into 2026. So what should you do? If you are holding physical silver, this is not the time to panic. The people who are panicking are the ones holding paper contracts. The people who are scrambling are the banks with short positions. The people who are terrified are the exchange operators watching their vaults drain. If you own physical metal, you own the asset that the entire world is trying to get their hands on. You are not exposed to counterparty risk. You're not exposed to delivery failure. You are holding real wealth. Now, if you are holding paper silver, SLV shares, or COMEX contracts, you need to understand the risk. If the exchange declares force majeure, your contract could be settled in cash at a price determined by the exchange, not the market price. The exchange price, That could mean you get paid $70 an ounce when physical silver is trading at $120. Read your contract, understand the fine print, and decide if that risk is worth it. The next 5 days are critical. December 29th is when banks reopen. December 30th is when those 63 million ounces are supposed to be delivered. If COMEX cannot fulfill those deliveries, if they announce emergency measures, if they change the rules again, you will know that the paper market is finished. And if that happens, silver is going to a place that nobody is prepared for. Some analysts are calling for $100. Some are calling for $500. Some believe that if the supply crisis persists into 2026 and 2027, we could see 4-digit silver, because at some point, industries will pay whatever it takes to secure supply. They cannot build solar panels without silver. They cannot manufacture chips without silver. And they cannot wait for new mines to open. The price will have to rise until demand is destroyed or substitutes are found. And we are nowhere near that point yet. December 24th, 2025. The vaults are frozen, the system is holding its breath, and silver is at $72. Merry Christmas. Welcome to the new era. This is the death of paper silver and the birth of the physical standard. Ignore the noise, watch the vaults, and hold the metal. I will see you on the other side of the lockdown.